I knew that at that point, right, 2 years, 2.5 years into it, that I wanted to exit my corporate job and really start focusing on building a business that I was able to control, a culture that I was able to create, and one that had the flexibility and essentially infinite return possibilities too.
Welcome to Multifamily Insights. I'm your host, John Casman, and I want to thank you for joining us for another great episode. If you are enjoying the show and getting some great value for your investing needs, let us hear about it. Leave us that rating and review and give us that honest feedback. It helps us, but it also helps other listeners find this show for their investing goals. And listen, if you haven't done so already, or this is your first time listening, be sure to hit that follow or subscribe button, especially if you get some value out of today's show. Now, today we're going to be talking to Karl Krauskopf. They say you're the average of the 5 people you spend the most time with. So if you want to grow as a multifamily investor, you have to spend more time with other multifamily investors. And an easy way to do that is to join our apartment investing mastermind group today. Just go to casmancapital.com and click on the mastermind button. Now, as a part of this group, you'll get access to expert trainings, group coaching calls, industry news and updates, as well as all of our webinars and workshops, including our 3-hour workshop on raising capital. Again, if you want to be around other multifamily investors that can help you scale your portfolio today and grow your network, make sure you're a part of the Apartment Investing Mastermind. Just go to casmancapital.com and click on the Mastermind button today. Karl Krauskopf is a real estate developer and managing partner of Gold MF. Obsessed with growth, he flipped himself out of a corporate job in the healthcare industry and is now focused on helping others make their money work extremely hard through townhome construction and adding value to operational apartments. Let's welcome to the show, Karl Krauskopf.
What's going on, John? Thanks for having me on. Super excited. And wow, you sound German, like a German native. That is beautiful.
Hey, I appreciate it, man. It's good. It took me a couple practices, but I think I finally got it there. Karl, I went over
my wife still
yeah.
takes my wife still is working on it too after 12 years, so no problem.
That was one of the things that she probably sounded like, oh, do I have to take the name? Okay, I should practice this. Karl, I went over your bio at a high level. Take 2 minutes and fill in some of those gaps.
Yeah, absolutely. So 3.5 years full time in the real estate business. I was 3.5 years before that, just working in a side gig, side hustle perspective, working as a chief of strategy in healthcare business services. So really focused on growth business, top line growth, as well as cost cutting initiatives in the corporate space. Really loved that work. Translated that over into the construction space. Quickly scaled up from single family home flipping to townhome development to now buying and operating 30 to 50 unit apartment complexes, and all focused here in the Washington state space. Right now, we are expanding outside of it soon, but right now we're again focused on being market experts in our space, operating in our backyard. Absolutely love it. It is a difficult place to manage, but it is an incredible place to invest.
I love it, man. You talked about, 3.5 years full time in real estate. 3.5 years prior to that was part time or working your day job, building up your career. And on the portfolio side, started with single family homes, moved into townhome developments, and now you're focused on kind of operational apartments. Let's start with just kind of that journey, particularly with the single family homes to townhomes, and then we'll get into the apartments. But when I hear townhome development, for many investors starting out, that word development, and maybe that's just a loaded word or a heavy word, but it seems like there's a lot of work that goes into the space, particularly in a state like Washington, where there seems to be kind of more legislation and rules and regulations involved. Talk to me about that transition going from single families ultimately into, to townhomes, and then obviously at the end move into apartments, but specifically from single families to townhomes.
Yeah, so let's rewind now 7.5 years ago, right? My first, why I even started in buying, and the first purchase was my first rental purchase or investment property purchase was a small multifamily, and the entire reason for that was just additional income. I had no intention of becoming and operating a large scale apartment complex company, and it was simply just as a additional income. Fast forward a little bit, that became multiple purchases, multiple small multifamilies. ran out of, or just about ran out of money. So I knew that I had to go in and start flipping. The Burr method was, or buy, rehab, rent, repeat was kind of coming online at that point, at least from a high marketability standpoint. But the deals that I was buying at that point were not in a Burr position, simply because I was buying more or less remotely. So again, fast forward a little bit, started flipping homes to replenish that capital, so that way I could continue buying rental property. But really fell in love with the construction process. Really started doing phenomenally well with the single family flipping. What ended up happening with it is, this is, again, rewind, this is 2019 at this point, and was just doing some anecdotal posting online on social media. Here's what I'm doing, like flipping a home, and you'd get plenty of people. I was getting plenty of people DMing me about, hey, I'd love to be in real estate. I just don't have the time. Is there anything I can do with you? So it really became this accidental capital raising spot where I started raising capital in the single family flips. So I was doing well. I was flipping. I was raising capital on each of the single family flips. But what ended up happening is I had more capital than I had deals to service. And so I knew at that point I had to go find bigger deals, or investors would find places to place their to put their capital. Right? We, as investors, we want our money working as hard as possible, as safely as possible, and I knew that they wanted a place to put the capital. So I looked at kind of the next phase, or the next spot for me to go into from flipping, which was development. And like you said, John, development is a big scary word. But there's ways to start it more or less on a easier basis, which is what I did, which was buying entitled townhome projects, or land that had permits, shovel ready permits, to start building ground up.
I love that. You just talked about really a couple things, and just working backwards. When you get into development, starting with entitled projects, meaning all of the legwork was already done. So it really was just the actual construction component which needed to be done, as opposed to, you've got this raw land, you've got to get it entitled, you got to work with the city, you've got to get the plumbing lines put in, the streets, and all those other things. You could actually come into the project and say, all right, let's build the house, or let's build the
Yep.
townhome, and rent it or sell it, or whatever you're going to do as far as your business plan. So that's a little bit easier than trying to go through that entire legal process of getting it entitled. So really good to know for anyone who is looking to get into development. Starting at that last phase, as opposed to the raw land phase, is definitely going to be easier, so you avoid some of the challenges that may arise on that transition from single family to townhome developments. You talked about really an interesting dynamic that took place. You were flipping these properties, just kind of posting online more casually, people reaching out to you saying, hey, that looks really cool, I'd be interested in investing. So now you're raising money without really expecting to raise money, but realizing you didn't have the deal flow to match the capital that was coming in. So that kind of forced you to say, okay, well, how else can I help these investors? What
Yep.
other kind of deals can I do? And that's a great insight, because when you have people who are looking to invest, that's the first sign that you may have a viable business. But then also taking on that responsibility, that's a question for everyone, right? Some people do not want that. They don't want any investor capital. But if that's something that you're willing to take on, recognize that you're helping other people, right? And I love that the way you framed it. You didn't say, hey, I had this slip and I needed $50,000. So I went out to my friends and asked them who could help. Right? That's not what you said. You
Mm-mm.
said people saw what you were doing. They wanted to invest in real estate, but they didn't have either the time, or they didn't have the energy or the education to try to figure it out all for themselves. So investing with you was their easy button. And that was something that you said, okay, this could be mutually beneficial. I'm willing to take you on as an investor, but now I need to go out there and find deals so that it matches kind of the capital that's coming in. And sometimes you may be hesitant to scale and to grow and take on investors' capital because it pushes you outside your comfort zone. But if you think about helping other people, I think that makes it a little bit easier, because it's not about you. It's not about, oh, I want to grow this big portfolio. I mean, you said it earlier, right? You didn't set out to build this real estate company necessarily. You just wanted to make some extra money, park some money in some real estate. But that started this journey, which you are now on. Talk to me more about kind of your mindset in transitioning from, let me get a couple flip projects to, oh, wow, I'm building a company with investors, with development projects. And now I've got to create some systems and scale and processes to help manage this growth.
Yeah, so good question. So I think the mindset there was really along what you were saying about helping people gain improve their returns or diversify their return. Right, the majority of folks that we know that even where I was at in corporate space, I was 95 to 99% invested in a volatile stock market. Sure, there's mutual fund options, ETFs, etc. But ultimately, it's something that I had zero control over. I had zero control and zero understanding of who was running those assets, or rather those investments, those companies. And so, I looked at it as a way for me to essentially start working with friends, start working with family, and hey, you can start working, or you can actually get diversification into not only real estate but Seattle real estate, and big capital bumps. Right, again, now we're in 2020 when everything was white hot. Right, COVID was around, and there were just buyers for every single project. Again, all of this, the flipping and development, was all in Seattle. So Seattle, big growth market, big appreciation market, and it was just everybody wanted a slice of that pie from the capital growth standpoint. So again, my mindset was I want to be able to help people. I want to be able to help people diversify their essentially their investment portfolio. But again, like you said, I wanted the ability for me to scale my business, because I knew that at that point, right, 2 years, 2.5 years into it, that I wanted to exit my corporate job and really start focusing on building a business that I was able to control, a culture that I was able to create, and one that had the flexibility and essentially infinite return possibilities too.
Yeah, you mentioned just creating a business that you could control, a culture that you could influence and kind of create. And that influence, I think, is really key when you're going out there as an entrepreneur, particularly when you're coming from corporate America. Because my guess and what I'm hearing you say, what you didn't really say, is obviously those are things that you couldn't control in
Right.
your day job, right? The corporate culture, the business environment. So those things can weigh on you, especially as you get longer into your career, right? When you've been in there 15, 20, 25 years, you just get tired of the BS,
Yep.
and you get to the point where you say, man, I really wish I had more control. And that's one of the reasons so many people turn to real estate, because they see that as a viable asset or asset class where you can have more control over your financial future. So I love that. We've
Yeah.
talked about your transition from single family into development. We will talk a little bit more about the apartment space and managing those assets. But today, you kind of have your hands in both worlds. And I'm curious, how do you manage a portfolio blended with kind of ground up development projects along with existing operational assets like existing multifamily?
Sure. So I've got an employee of I've got a team of 4 employees that essentially is all bifurcated into the different roles that you would imagine an asset management company would have. Right. It's deal sourcing, it is investor capital flow, and then it's asset management. Right, being able to manage the actual apartments, being able to manage the facilities that we're working on. And so now my job is less focused about the day-to-day operations of everything and more about the oversight and scale of it all. Right, where if you think about it from a flywheel perspective, if there is some stress on the asset management role or asset management side, I'm able to take myself and put myself into that particular position. Right, maybe there's something going on with one of our apartments that needs a lot more attention. Maybe our leasing cycle isn't where it needs to be, and we're buying a new apartment complex in later this year in 2024, And so now I'm having to step back from asset management and more so focus on the investor capital raising side of things. And so now again, my role is more so being able to pop into each one of those positions of the flywheel and really lend my expertise and lend my time into that part of the business and really help keep things moving smoothly.
I think that makes a lot of sense, especially when you're scaling a business, right? You need to be able to kind of pop in and out of different areas and be able to scale and have your team members pick up in certain areas as well. So having that flexibility, I think, is really key to grow. Going back to, where you started, right? You talked about 2017, 18, 19, and just what was going on, particularly in Seattle, heading into COVID and those years and how much appreciation you were seeing on some of those properties. Fast forward to today, a lot has changed, right? The interest rate environment has changed. Demand for some of these assets has changed a little bit. As you look back over the last 7 years of investing, how have you changed strategies or updated your approach so that you can maximize value, protect investors, and take advantage of the market situations?
Such a good question. So back in 2021, it must have been. Back in October 2021, I was still all in on buy to sell, flip to build to sell, flip to sell. Everything I was buying was involved in that type of 6 to 12 month kind of flip turnaround until October 2021. Right. What happened then? Fed Powell, Chairman Powell, and Janet Yellen came out saying inflation is not transitory; it's here to stay. We have to do something about it. At that point, I knew I have got to change my strategy. I cannot buy any more um, X to sell, right? Build to sell or flip to sell, because I don't know what's going to happen, but I know something's going to happen in the next 12 months, something with monetary policy. And so I pulled back. I stopped buying in October 2021. Obviously, I had I think 13 projects going on at that point. I spent 6 months re-educating myself on how to buy and operate larger scale apartment complexes. In which case I bought essentially our first apartment complex in July of 2022. 30 unit apartment complex. Then shifted gears completely over to the longer term buy and hold. Didn't get any variable rate debt, was all fixed rate long term debt on all the projects going forward, and it happened to benefit us very well because for anybody that's listening now remembers probably what happened in the summer of 2022 is interest rates just went absolutely bonkers. Fastest climb that we've seen. And now we're, October 2024 rate. We just had our first rate decrease in, since we started climbing over 2 years ago. And now, again, we're just buying for the long term.
I love the pivot, right? And the fact that you were paying attention and saw that coming. I mean, you really pivoted strategies. You went from buying properties with the explicit vision of selling that immediately when it was done, building to sell. And that's your vision, right? We're going to get this thing done. We're going to sell it immediately, to long-term holds, not just, hey, we're going to build it to sell, but hey, if we need to hold it for a year or two as a rental, we can do that. No, you went all the way to long-term holds with long-term debt in place, fixed rate financing. And that's a 180 really pivot. I mean, one is fix and flips basically, or build to flips. The other is long-term holds. That feels like a very drastic change.
Mm-hmm.
You mentioned you re-educated yourself. Can you talk to us a little bit more about maybe some of the deep work you went through and any key insights you uncovered that led to you pivoting so drastically from what essentially was a flipping business, right? Either building or renovating to flip, to what is now a long-term hold strategy?
Yeah, absolutely. So I mentioned early on that my very first property that I bought was a small multifamily. So I had that experience in buying and asset managing essentially a small multifamily, but had no experience in the commercial multifamily, right? 5+ unit complex. So I had no experience in the debt. I had no experience in the capital raising specific to long-term holds. No experience in the underwriting for it at that point. And so I believe it was three separate books that I read over the course of that 6 month period. Obviously, there was a lot of networking events and conferences, one-on-one calls with more experienced operators as well. That really helped put me in a position to be able to start offering on these properties. And before our first before our first offer was accepted, I must have underwritten close to 75 different deals. Not underwritten, excuse me. I must have offered on 75 different deals early 2022. And one ended up landing, and yeah, I mean, we closed it in July 22. So just under a year it took from pivoting to buying a completely different asset strategy.
When you made this decision, had you made the decision right away and then sought out the people to help you with that? Or was this really something where you were trying to see what other options were out there, and through reading the books and talking to other people, you landed on this strategy? Which came
Y-
first?
Yeah, good question. So I think it's probably a combination of the two. There was really just two asset types that I wanted to investigate. One was the multifamily, which is where we ended up landing, and then the second was actually the medical space, which I'm glad we didn't get into at that point. This was this was in the throes of COVID, actually. And I thought, hey, maybe I should try medical, like outpatient, or ER and things of that type, but ended up not going that route. Thankfully, I didn't. I understood tenants, toilets, and termites, and I figured, hey, that would be the easiest to get into, the easiest first purchase, because at that point, I was full time. At that point, I was full time running my business, and so I didn't want to try a completely different asset strategy with a completely different asset type. Um, uh, all in the same feral swoop. So ended up sticking with the multifamily. Realized I wanted to do that. That was probably, maybe a 2 week kind of decision point. And then after that was, off to the races in terms of education and networking.
That's really good to hear. And there's something really insightful in what you said. We all have to make pivots in our business, but too much change can be overwhelming. And you could go down a path where there's just a huge gap in knowledge or experience. So you wanted to mitigate that and not go into a new strategy, a new asset class, a new business plan all at once. Instead, you said, okay, hey, we're already making a pivot from, buying to sell to a long-term hold strategy. Let's stick to the thing that's closest to what we're already buying, which would just be, multifamily. So instead of just single family houses and townhomes, we're still going to be in kind of this, residential real estate space. We're just now going to go into commercial multifamily as opposed to single family homes or townhomes. So I think that makes a lot of sense because, again, I think too often people want to pivot or scale, but what they're going to get into is so different from what they were actually doing that a lot of the knowledge that they've gained is not as relevant. So it's a great point, great insight there. Question for you in regards to your investors. I'm assuming you had investors on the multifamily deal you
Yep.
you did. What was their response? Because if they've known you for the development side and investing in these townhome deals, and you talked about where Seattle was and Washington was the market at that time, you're probably crushing on these deals and great returns. To now we're going to do long-term holds in multifamily. That feels like a pretty big departure. What was the response from investors, and how did you address their objections?
Yeah, no, good question. So no real objections, because for the most part, the people, I would say, actually for the entire part, all of the investors that I were working with at that point were either family, friends, or past coworkers, and they're all sophisticated investors. Sophisticated, or I mean sophisticated by the true sense of, they understand how to appropriately calculate IRR. They're focused on a certain type of growth. And so they are truly sophisticated in that sense. Obviously, they're also accredited, and so they heard my talk track of 9%. It was 9% at that point, 9% inflation. It's not transitory. I said, obviously Powell and Yellen said they're going to have to do something about it. Like, hey, I am merely a steward, an usher, custodian of your capital. I want to make sure it's safe, even if it means that our rate of return is going to be lower. My ultimate goal or my ultimate job is to make sure that your dollar never loses value. Um, and at a point where inflation was just uh, bonkers, is they wholeheartedly believed in me, and they knew it was a good idea. So I don't there was not a single objection.
I love what you said because what you're getting at is, first of all, understanding our role, right? And I'm talking to most syndicators at this point, but anyone who is raising capital, working with investors, your job is to help these individuals, right? To help these LPs, to help these investors. And the first thing you got to do is protect their capital. And you do that by understanding where the market is and what the market dynamics are. And you have to keep your eye on the changing landscape. And the fact of the matter is the strategy that you were employing was no longer suited to be successful moving forward based on what was going to happen with interest rates. So you pivoted. And part of that strategy meant, hey, investors, you're going to have to get comfortable with lower returns.
Yep.
But my job is to first and foremost protect your capital. And it sounds like you got ahead of those conversations. You told them what kind of business plan you're looking to do next so they could get comfortable with it. And I just think that's really important because I think too often things change, but sometimes operators and syndicators don't update investors of what that means for them, or they don't pivot their strategies to match the new environment. So really helpful. And that's a really great insight for anyone who is looking to get started today or looking to get into the space where they're working with other investors. If you could talk to somebody who was, maybe looking to get started today as a syndicator, what feedback or advice would you give them?
Yeah, good question. So a couple points is really truly understand what's happening today in the market, and not just market in the sense of stock market. I mean nationally, geopolitically. I also mean in more so specifically regionally and locally. So, do you have a market selected? If no, go figure out where to find. I believe it's Institute is my ideal, my preferred one of my preferred resources. Milken Institute is a great place that has top performing cities for each year, and they rank it by population growth, job growth, IT or rather high tech impact, etc. And really find the market that makes the most sense for you. Maybe it's something that's local to you. Maybe it's not. Maybe you're somebody who lives in the Bay Area, and you may not think it's the best to go start raising capital there. I would say the second part is who is your audience, right? So first off, know your market. Second off, know your audience, right? Who do you think you're going to be able to raise capital from immediately? It's probably going to be the people that know and trust you, know, like, and trust you, right? The triad, and have conversations with them. Hey, Uncle Sally. We live on the West Coast, by the way. Uncle Tim or whatever it is. What kind of properties or what kind of investments are you looking for? Is it cash flow? Is it appreciation? And then start mapping out who your relationships are, and whether or not you think they're going to be able to invest, how much they're going to be able to invest, and start scaling from there. Right. I've got 5 questions. 3 that are very relevant to this conversation. 3 questions that I ask every single potential investor is what do you know about real estate? What do you know about multifamily real estate? Or what are you curious about multifamily real estate? How much and when can you invest? And that, as somebody who's looking to raise capital, you want to know, again, you want to know your audience. And those are the 3 questions that will really help you prioritize your capital raising efforts and really get a good sense of, who's serious or not.
I love it. 3 great questions right there. First and foremost, what do you know about real estate? What's your experience with real estate? Have you ever invested? Obviously there are ways of asking that question, but what do you know about real estate? Second is, what do you know about multifamily? And then that last question is, how much and when would you be looking to invest? That's going to give you the insights you need to understand someone's time horizon, interest level, and really figure out what challenges or information they need so that they can make an informed decision. So really great points, really great questions there. You got a lot of great stuff there, Karl. You're out there in Seattle, so we're going to talk a little bit more about that in a minute. But first, I want to make sure that everyone has their website just in case they want to check you out. You can go to gold-mf.com. That is the website, gold-mf.com. You can also connect with Karl on LinkedIn. We're going to give the link to that in our show notes so you can check him out there. Right now, we're going to transition and go to our round of insights. Karl, give me a failure or an apparent failure that set you up for later success.
Yeah, good question. So one of the very first failures in the real estate space was a lack of due diligence. And now I am absolutely, I spend as much time as possible underwriting, not just the financials, but the physical, everything about a property. So let's call it my third property that I purchased to flip was a property in Seattle. I bought it off market from a wholesaler, essentially somebody who had a contract. This was a single family. And they were assigning the contract to me. I again was new, had no questions asked, signed it, went through the process, closed on the project, started renovating it, got a lawsuit about a month and a half after renovations. So at that point, ended up spending about $30,000 on renovations, some hard money costs, some closing costs, etc. The lawsuit basically said, Mr. Karl, you bought this property fraudulently, and you need to return the property back to its rightful owner. So of course I'm like, excuse me, what? What's going on? So fast forward, what ended up happening is somebody stole the identity of a property owner, fraudulently sold the property, fraudulently connected with this wholesaler, got the property sold, went through the whole typical title escrow notary process, and they made bank, a couple $100,000. Meanwhile, I lose a lot of money, $50,000, $60,000 between renovation, hard money costs, and origination. So due diligence, know your sellers, know the whole interaction between the seller, why they want to sell, and just really know what's going on with the transaction that you're doing.
So I'm going to have to pause the round of insights because that's a lot. That's a lot. Okay. So you buy this property from a wholesaler. Was it a double close situation or they just assigned the contract to you?
Assign the contract.
So they assign the contract to you, close on the property, title company's involved. So they go through everything and okay, nothing shows up that this is fraudulent at this point. You get a letter 2 months into the renovations that you acquired this fraudulently. And it sounds like you did not win this dispute.
No.
Okay.
There was nothing to win.
So, but no one lived at this house at this time?
Correct. It was a 15-year vacant home. And that's how the sellers were notified is that, hey, congratulations, John Doe, you're selling your property. Now we're going to take 15 years worth of vacancy violation fines, and we'll pay them out at closing. So obviously this was a very, very old owner. And so they didn't really know how to act on it. It took them, several, let's call it 3 months to figure out, hey, is this real? Is this really happening? And if so, what do I do? Who do I contact? They contacted attorneys. And that's where we picked up.
All right. So for the sake of our listeners and time, how do we ensure that we are never on either side of the table with someone either, taking our identity or purchasing a property under maybe false pretenses?
Yeah, good question. So the reason I bring it up is, again, just from a due diligence standpoint, knowing everything about the transaction that you're about to buy. And so, it starts with I always start with the seller. Who's the seller? Why are they looking to sell? Right? Really understanding that helps you understand the motivation. That also helps you understand, potential negotiation tactics as well. But obviously, okay, I know, John Doe is the seller. Okay, John Doe is 80 years old. Have we had any interactions with this John Doe in person? If yes, does John Doe actually look 80 years old? or is John Doe a 30-year-old gentleman who's posing to be John Doe? So again, it's less about preventing necessarily mortgage fraud, and more about, again, knowing every single thing that's happening from the seller to the note, right? Your mortgage, whatever type of mortgage you're getting on the property, the tenants that are in place, right? Or are the tenants actually paying? Doing true bank statement verifications, meaning from your seller, verifying that they're actually getting the cash from that particular tenant. There's been many instances where, not necessarily with me, but where a seller is going to fraudulently claim that they're getting $1,000 per tenant, whereas maybe they're only getting $800, and they are the ones who are flubbing the additional $200. And so again, making sure every single piece about that transaction as possible.
No, I appreciate that. And thanks for walking down that path to go a little deeper on that deal. I think that's very helpful for us and our listeners. All right, let's get back to our round of insights. Give me a digital or mobile resource you recommend for investing.
A digital or more mobile resource? Oh, that is a good question. So the simplest one, I had mentioned Milken Institute. Love that one from a market study perspective. Also really enjoy City Data, just understanding what's going on from a free resource perspective. And then the last one would be, that's a good one. I mean, it's simple at this point, right? Any kind of GPT or large language model, I think is tremendously valuable at this point. They're going to continue to be more and more valuable as we understand more how to utilize AI tools. But, we're not doing this right now yet, but there are certainly tools out there that will help you underwrite properties. If you're the operator, you can figure out how to start leveraging AI to help you with your underwriting. If you're a passive investor, there are prompts or ways to prompt your large language model to help you understand and validate operators' assumptions with a particular project that you may or may not want to be investing in.
I love that. All right. Give me the book you've recommended or gifted the most in the last year.
Yeah, good question. So it is Bold, How to Impact the, I'm always going to mess up the subtitle, but it's Bold, How to Impact the World, Create Wealth, and Create a Long-Lasting Impact on the World. It's written by Peter Diamandis and Ray Kurzweil. Absolutely love this book. It is not real estate based. It is a business based. It is a community impact. It is innovation based. And so there's a ton of different ideas in there. Again, this is pre large language model or ChatGPT, OpenAI. It's before any of this stuff has really come out, and it talks all about the advent of adoption of these exponential technologies. AI is one. And as they start converging, these new markets, these new opportunities that are going to start opening up.
Give me a daily habit that helps you stay focused on your goals.
Running. I'm a big runner, so I'm an ultramarathon runner. I just did a 50K, so 50-kilometer run on Saturday this past week. And it was tremendously hard and difficult, but it is daily running. About 60 minutes a day, 7 miles a day is what really helps me just be a better person, be a better husband, a father, a better business owner, because it lets me tune out the world and really tune into myself, all while improving health. There's just endless connections between physical condition, physical health, and mental health and spiritual health as well.
All right. Give me your number one insight for scaling a multifamily business.
Leveraging other people's time, right? We've as syndicators, operators, we talk a lot about other people's money, which is great. It helps with scalability. What I would say is above and beyond that is leveraging other people's time. And so what does that mean? That means employees, right? So figuring out what is your lowest cost, lowest friction way to hiring somebody. Whether it's partnering with somebody as a business partner, or potentially as truly as hiring somebody, right? The easiest way to start is hiring virtual assistants, and then you start scaling into staffing agencies, W-2 employees, etc. So leveraging other people's time is by far the best way to effectively scale.
All right, let's change the subject a little bit, man. Last question here. You are out there out west in Seattle. Give me your favorite place to grab a bite to eat.
Oh my gosh, Baitong Thai. I am a big traveler. My wife and I are big travelers. We like to go down to Southeast Asia, specifically Thailand, and winter and spring. Late winter, early spring, when it's all muddy, there's no more snow out here in Seattle. And so we go to Thailand, and it's absolutely beautiful. The food is amazing. Place is amazing. I have found nowhere except for a restaurant called Bai Tong Thai here in the Seattle area to get, in my opinion, the most authentic Thai food this side of Thailand.
I love it, man. Great place. Sounds like it's a phenomenal restaurant, and love the fact that you love traveling as well. So good stuff there. For those folks who are in Seattle, make sure you check it out. You gave us a lot of great stuff, Karl. Loved hearing your journey going from kind of corporate America, getting started with a single family space, kind of growing up with, smaller multifamily, ultimately getting into townhome developments as well as commercial multifamily. And I loved how you talked about that transitional period, recognizing what was going on with the economy, with inflation, taking a step back and recognizing that you need to pivot your strategy completely, going from kind of building to flip to long-term holds with multifamily, and just understanding that process and what it took to be successful there. Again, for folks who want to learn more, they can go to your website, gold-mf.com, or they can connect with you on LinkedIn. Karl, thanks again for being a great guest and coming on Multifamily Insights. We look forward to staying in touch with you, and I hope you have a great day.